Let's get the ball rolling. All right, so. Fucking whore. There we go. And let's get rolling. Chart Dreamer, hello, and how are you? Doc, what's happening? Live, live, and live. And here we go. Here we go, yo. All right, let's go here and get this baby streaming. Uh-oh. USB Studio coming right up. Start streaming. Oh, we gotta change this. That better? And it's not moving. Dwight, invite you to co-host. Dwight. Oh, well, Dwight. Guess he's here somewhere. Stop recording. Video capture. I'm not moving around, so I'm going to delete the video capture and try it again. Okay. And there we go. And that makes me look horrible, but all right. There we go. All right. So, and there we have it. Yes, and we are live. Oh, whoa, ho, 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 ho. What do we got here? Just getting ready to get started. Hopefully, you guys are all okay with this. Let's go back and start from the very beginning. Who do we have here tonight? Johnny, tell him what he's won. Well, it is Shirley and a raw collector. Raw collector? What the hell's a raw collector? What does a raw collector do? Anyway, Kyle Rice, Carrasco, Rugger, Jimmy, Rob, Sebastian wants to take a look at Ford right off the bat. No hi, hello, or anything. Ford! Let's take a look at Ford! I actually have some Ford. And actually, Ford's working pretty well for me this week. Now, Ford was my favorite 2 years ago. It was like I'm always buying Ford. No. There's certain stocks you will notice if you go into my history, because yes, I do post all my trades, okay? And you will see that I have bought Ford quite a bit. Uh-oh. All right, what do we got? Like done. All right, Chart Dream, I have no like done, what that means. Yo, James from Arizona, what's happening? Annie, hello, how am I today? I am wonderful. How much money do you start trading? Oh, to start trading with you. Oh, Amy, you can use any amount you want. We need to send stars to secure the live. Okay, I'm not quite sure what that means, but alrighty then, put the glasses back on. We're gonna take a look at Ford in a second. Let's keep on seeing who's here tonight. Roger's here. XVX, okay. Christina, how are you, Miss Christina? Where'd she go? Where'd she go? There she is, right there. Atheist 101. Okay, good for you. Tony, good evening. Darksteiner. Quelcome. Okay. Marie, Legend, Pepe, Azur. Top Dat Batty. Hey, what's up? Okay. What do you think about ETH? Now, I'm going to make the assumption ETH is Ethereum, which is cryptocurrency. Now, you're new here, dude, because if you've been here for a while, I don't do cryptocurrency, which includes Ethereum and also Ski. That's also XRP. Don't do XRP either. Let's keep on going. What's my opinion? XRP. Yep. No. Is that Bilbo Baggins? What's your opinion on XRP? All right, Ski, this is the second time you've asked me my opinion on XRP. You ready? Here it comes. I'll give it to you for the second time. Ask me a third time. I'll give you the exact same opinion as I gave you 2 times ago. XRP is not a dividend stock. Okay, if you go back and just take a couple steps back and think about where you are. Okay, the name of the show here is Dividend Stock Talk. The key word should be the very first word because it's capitalized. That's how you tell it's a key word. It's capitalized. Dividend Stock Talk. XRP does not have any dividends. XRP is going to be a no. Cough, cough, XRP is better. All righty then. Okay, there's absolutely nothing with XRP. You guys have fun with that. And here is the old folks. We, the geriatrics, whatever you want to call us, But anyway, really don't care. But I'm looking for a simple, safe, predictable, consistent 1% per week. XRP, Pilot, Waste Management, yes. SCHD, hell no. QQQM, double hell no. What do I think about Philip Morris? We'll take a look at that next. I know you focus on dividends, but have you ever considered options? Okay, so you're relatively new here because I do dividend stocks along with stock options. I merge the two together, bring the best of both worlds. Best of both worlds. Gotta get those words proper. Now, dividends, yes, because the company's consistently profitable. They share the profits. Great, wonderful. Especially companies that have consistently increased their dividends to the shareholders for more than 20 years. That's 2 decades. Now, you put that together with stock options. Well, there's a reason, and you just follow along, and you'll see a few reasons why I do dividend stocks along with stock options. Okay. Press the hearts on secure. Okay, don't. All right, Steve Tucker, howdy from YouTube world. Yo, how do you join the team? Annie, I tell you what, best thing, Annie, send me a number, I'll give you a call. Now, when I say send me your number, I will give you a call. That should be your first indicator. I do not do Telegram. I do not do WhatsApp. I do not do cryptocurrency. I do not do what's it called? Quick contracts, fast contracts, I forget what those are called. I don't do Forex, I don't do futures, dividend stocks for weekly cash flow only. If you're looking for something else, you're definitely in the wrong place. We gotta get the numbers up a little bit because if we don't get 50 by 9:30, we're gonna reboot, okay? Anyway, let's keep on going. We're gonna take a look at forward first, okay? For those of you who don't know, my name is James. This is Dividend Stock Talk, where I talk to you about what I do. This is what I do. I don't make any recommendations whatsoever. I don't give any advice whatsoever. I take a look at stocks. I take a look at the numbers. I do a strategy that I created for my 9-year-old daughter back in 2008. It had to be simple, safe, predictable, consistent, and no way for her to lose. Okay, I don't know about you, but how do you teach a 9-year-old to invest in the stock market, especially when most adults don't understand it? Hence the reason, simple, safe, predictable, consistent, and no way for her to lose. Came up with 5 rules that went along with that. Rule number 1, if it's not on the list, don't look at it. Don't buy it, don't bother with it. Plainly put, if you don't understand the company, if you don't understand all the numbers associated with it, do not invest in it. If you don't understand it, then don't do it. It's actually that simple. You don't understand it, don't do it. Rule number 2, never sell at a loss. It defeats the purpose of the game. And yes, this is a game. It's an adult game, and it's not for everyone. Rule number 3, make sure the company is consistently profitable. This one always boggles my mind. The reason being, if a company is profitable, okay, the annual reports will tell you, yes, we made more money than we made last year. Or they'll say, we missed our target. One or the other. It's a 50-50 shot. You're going to be profitable or you're not. Now, the reason why I like dividend stocks only is because dividend stocks are much easier. They're safer. They're more predictable. They're more steady. They, most of the time, have been in business a lot longer. Okay? Now, when I say consistency and profitability, rule number 3, I like 20, 2 decades, 20 years of increased profitability or increased dividend. Now, why do I say increased dividends? Because a dividend is a portion of the profits that the corporation gives back to the investors. And that's us. We buy, we sell, we become the investors. Okay? You own a portion of the company as soon as you buy one share. You own a part of the company. You are entitled to a portion of the profits. Okay? 2 different companies in the stock market. And don't let anyone fool you. It's only 2. One will share their profits. The other one will not share their profits. You've got to decide. Do you want capital appreciation, which is you buy the stock here and it goes up, 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 up? That's capital appreciation. If that's what you're looking for, you're in the wrong place. This is not it. Company number 2, they share their profits through a dividend. Now, we checked last week, there's 9,875. There's actually increases every day. There's more and more companies being added. Probably next week we'll check again. It's not really that big of a deal, but 9,875. Half of those, about 4,500, will pay a dividend. The other half will not. So ask yourself a question. If you are going to invest your money, do you want to invest your money into a company that is consistently profitable? Or are you just okay with the next shiny object, the next hot topic, hot stock? Now, there are some hot stocks that have been making news lately. You got Nvidia, you got Tesla, you got a Micron, you got Amazon, QCOM, stocks like that that make the news. Okay, great. But do you check out the numbers? What is the consistency of profitability? Well, Netflix doesn't have any profits. They don't pay dividends. They don't share the money that they make. Okay, they haven't made a profit since they've started. Well, it's by design. If you don't make a profit, you don't have to pay taxes. It's kind of genius if you think about it. But other stocks, that dividends are a clue to how profitable they are. So you're either looking for cash flow or you're looking for capital appreciation. One or the other. I'm retired. I need cash flow. My bills keep coming due. I don't punch a time clock anymore. You've got to figure out at what point do you want to retire, and then what do you do with all that money you've earned through your working life? Okay, I've been working since 1973, 1974, so in that area. The older you get, the more you forget. That's why we write stuff down. All right, anyway. Let's take a look at Ford. Anytime, wait a second, I didn't finish my rules, okay? 1, never buy something you don't understand. 2, never sell at a loss. 3, make sure the company's consistently profitable. 4, consistent, wait a minute, no, 4 is weekly options. Now remember, I say I want a weekly cash flow. The only way I'm gonna get a weekly cash flow is through weekly options, stock options, or sitting in front of my computer looking for certain setups that I can buy, trade, and sell on a daily basis. Yeah, no, sorry, I don't do that. I like weekly options. I like one strategy specifically. It's basically set it, forget it, 5 or 10 minutes, I'm done. That's it. I'm not telling you it's easy, but it's really not difficult. It was created for a 9-year-old. Okay, if a 9-year-old can understand this, I'm pretty sure you can. Let's just take a quick gander at the little princess herself when she was 9. This way you have a good idea of who it was created for. So here's all my, right behind me, it's all my social media sites, YouTube, Twitter, Facebook, all that kind of nice, neat, fun stuff. How you can get a hold of me. It's really not that difficult. I'm not that difficult of a person to get a hold of. Videos, here we go, look at this, 870 videos. Yeah, I've been doing this for a while. Going to the oldest ones, here is the little princess right here, listen up.
Hi, I'm JC, and me as you being part of my internet website called Thingy, which my dad didn't like me calling me that, but I do. Being part of that, you're going to be getting weekly lists of stocks and I'll be trading, and every month you're getting 4 lists of stocks that you can choose from that will help you get the best return on your money.
Okay, this part always cracks me up. Right here. This is me 15 years ago. I had more hair back then.
What does that mean? That means every single day you buy a different stock, every single day there's a different company paying out dividends. Anyway, seriously.
I laugh every time I see that. What an idiot. Well, you know, it is what it is. How do you keep a 9-year-old entertained? I mean, think about it. She's 9 years old. How do I keep her entertained? I had to make it fun. So, simple, safe, predictable, consistent 1% is what I'm looking for. Okay, that's who I created it for my 9-year-old daughter. She jumped up my lap, said, Daddy, what are you doing? Can I do it too? Can you teach me? Well, then I had to figure it out. I had to figure out what strategy is good for a 9-year-old. All right, so when you ask questions, keep that fact in mind. The strategy I'm showing you was created for a 9-year-old. All right, so let's get this rolling. Okay, first, I always want to look at the 1-year chart. I'm always looking for 5 things. You ready? Number 1, the high, the low. Where was it a year ago? Where is it now? And what direction? Sideways, up, down, sideways. We're at 924 at the moment. Now, I did buy some Ford like a couple weeks ago. Okay, fine. I like Ford. All right, let's take a quick look at the numbers. A year ago, we're at 1289. The high of the year was back in the middle of July, and that was 1489. The bottom of the year was today. But before that, it was back in August. All right, let's take a look at the last 90 days. Now, I look at 4 or 5 different charts, always looking for the same 5 things. The high, the low, where was it, what's the direction, blah, blah, blah. High, low, where was it, where's it? Look at this, up, down, up, down. Simple. Where's it gonna go next? Well, as soon as she finds the bottom, it will turn around and go back up. What do I like about Ford? Well, besides the fact that they're over 100 years old, I really don't see them going anywhere. They're at 924 at the moment, but she bottomed out today. The low today was $9.12. Well, the nice thing about that, now you may think it's not nice, but here, listen, just listen to me. Yeah, just hear me out. That's what I was looking for. Hear me out. Okay, you ready? Number 1, it's over 100 years old. Number 2, if you think they're going to disappear overnight, ain't going to happen. Also, the book value, if you understand what a book value is, you take a look at a balance sheet. What do you own? What do you owe? So between the two of those, all the debts, all the assets, you throw them together and you liquidate the company. That is the book value. If you sold off everything that Ford owned, or all the money that is owed to Ford, and they pay off all their investors, you're getting a hell of a lot more than $9.24. So if you buy it at $9.24, they decide to liquidate and pay everybody off with the liquidated assets. You're getting more than. So book value is a very important number. Unlike NVIDIA, now NVIDIA's at what, 130, 140 now? The book values is $1.74. Check the numbers. The best place to check the numbers that I found is Yahoo Finance. Let's go to Yahoo Finance. Yahoo Finance, right there. Now, first thing I want to look at, find yourself a good website, a financial website that can give you the numbers that you're looking for. NVDA. Right there. Okay, let's take a look real quick, see if this makes sense to you. So look at NVIDIA, $133.57. Okay, so let's go to statistics. For the fun of it, statistics. Now, Yahoo Finance, you have a lot of interesting stuff. Summary, news, research, charts, community, statistics. Being stubborn. Financials, analysis, options, holders, sustainability, interesting stuff like that. And if some strange reason the internet's not working. Yeah, I want to prove a point and there's no internet tonight. Doesn't that just piss you off? All right, here we go. Right there. You see that right there? Book value per share, NVIDIA, $1.74. It boggles my mind why people like that one. But you can go to almost any company and do the same thing. Well, let's look at Ford. Because we're talking about Ford, right? Come on. Here we go. Here's Ford. Book value per share, $11.15. So the book value is $11.15, but the stock price is $9.24. Well, I kind of like that idea. Buying something at value. All right, anyway, let's get out of that. All right, last 30 days for Ford. Looking at the 10th, right there. So here's your last 30 days. Again, the high, the low, where is it, all that kind of stuff. Look at this, up, down. That's basically it. Up, 30 days ago at 960, we shoot up to 1040, we drop down to 920. Okay, up, sideways, down, and it gapped down. I love a gap down. Gap down usually has a tendency to fill, especially when they're at this level. Now that's the 30-day. Let's pull it back a little bit. Okay, look, it hasn't been this low all year long. It's channeling right here between the 12 and the 13 for the past, for 6 months. Then she drops down here between the 1050 and the 11. And just goes sideways between that. So now she's dropping down again, right at the $10 area. Well, this is the lowest it's been all year. Okay, well, that should give you some indication because you're going to make the most money buying low and selling high. Well, if it is at, 924 at the moment, well, great. What else can you use to decide whether or not it's a good buy? Well, look at right here. Go over this side and make it easy to see the numbers. This is the option chart, okay, or the option chain. It tells you what the strike prices are. Here's the puts over this side. Here's the calls over this side. I'm going to point out something to you and make you think. So think about this for a second. Hold on. Okay, $9.50. Right now the stock is at $9.23. The $9.50 call option, there's 50,000 contracts open. And there's 22,000 contracts today. That was the volume today, 22,000 contracts. Now, each contract constitutes 100 shares. So 51,000 contracts is over 5 million shares. Okay, right here, 51,000, 32,000, 14,000, 9,000. Well, there's a lot of people thinking this thing's going to go up. That's a shitload. But look at the put side. Okay, 4,000, 7,000, 14,000, 8,000, 2,000. That's hardly any. Not even close. This is about 100,000 here. And there's not even 25 here. 100 to 25, that's a 4-to-1 ratio. 4 times people think that the stock is going to go up as opposed to stock going to go down. So look at all the odds and probabilities, because odds and probabilities are big for me. Okay, I want to lean towards the odds being in my favor. Okay, that's why I sell options. I don't buy options because 80% of all options expire worthless. So why buy them? Because then you're in the 20% group. Okay, so 20% of the time people win. Well, 80% of the time they all lose. So why would I buy an option? I don't. So that being said, let's take a look at what I consider to be a safe, predictable, consistent trade. I call it a covered call. All right, so right now the stock's at 924. If we buy it first thing in the morning at 924, we sell somebody the rights to buy it at 950. Don't look that good. It's going to 5 to 9. It doesn't look that good this week. Why? What's with that? It looked good yesterday or this morning. Next week, the 950s are going for 7 to 8. That was a terrible today. That's weird. Well, not today for Ford. But if you like Ford, these are some of the questions you need to ask yourself. Okay, do I like the numbers? Do they make sense? Now, Ford, 2 years ago, the premiums were great. Premiums aren't that great this year. But I did buy some Ford. Oops, I'll go over here. Nope, not there. Right there, Ford. Whoops. Yeah. Okay, I did the 950 puts. Basically, I like it. I like it at 950. It was like almost at 3%. So I said, why not? Let's do it. but I don't usually do puts here on the show. I do them in private, but here on the show where I give you stuff, information for free, I usually only show you just one strategy and that's it. Okay, but I do a lot of different strategies. Let's go back to here. All right, let's go back to here, and here we go. All right, so that's Ford. Do you like it? Yes, no. What does it normally do this time of year? And I think, yep, don't look good. Well, right here, here we go. The next couple of weeks. Okay, so here we are right now. 210. This is February. The blue line represents this year. The red line represents 10 years worth of data. What does the stock normally do? Well, normally she goes to the downside all the way up until the middle of to the end of February. Okay, slowly going down. But right here where we are now, she's going to go sideways for this week. I'd like to be out of Ford this week and not have to deal with it. But we'll see what happens. Now, I don't mind owning Ford at 950 because if I do own it at 950, what are we looking at? Let's go back to there. 950 for next week is just below 1%. Doesn't really make me that happy, but it is what it is. And remember, first thing in the morning, all these numbers are going to change. When the market is closed, the numbers don't change. They stay stagnant, and it's easier for us to do our calculations. But during the day, these numbers are changing. Constantly changing. All right. Don't. Okay. Do I send it here? Now, Annie, you can send it to YouTube because that gets sent to YouTube, goes to my Gmail. My Gmail goes right to my phone. So, yes, I will see it after the show. So, send me your number. I'll give you a call either tonight or sometime tomorrow. But I do. I call everyone who leaves me their phone number, I call them. Now, when I say there are about 30 scammers pretending to be me, they're going to try to talk you into some cryptocurrency, some Coinbase, some fast contracts, something. And they'll probably do that through either Telegram or WhatsApp or some kind of email, something. Well, I'm telling you right now, if you really want to talk to me, drop me your number and I will give you a call. I do not take money from people. I don't. If I ask you to do something, well, I'm telling you right now, that ain't me. Okay? Pick up the phone. I will actually call you and I will talk to you. This strategy is not for everyone. Okay? It's not like this is a business for me. This is a hobby. This is something I just enjoy doing. That's the reason why I'm doing it. I'm not looking to make money. Now, do I have stuff to sell? Well, of course I do. And the reason why I sell it, because I don't want you to think that the information is not valuable. That's why I don't give it away. I give away one, and that's this right here. Okay, if you're here, this is all you need. If you want a simple, safe, predictable, consistent 1% per week, that's over 50% per year. You're either going to do the money investing yourself or you're going to give it to someone else to do. Okay? Anyway, let's get back on track. So that's Ford. Next, we want to take a look at, I'm definitely not going to look at SCHD and QQQM, dude. I'm terribly sorry. They're just pieces of crap if you ask my humble opinion. But you didn't ask my humble opinion. XRP is not a dividend stock, and I don't know why you keep asking me for it. Alrighty. Let's take a look at these questions. What about Philip Morris? Ooh, PM, Philip Morris. I like Philip Morris. It's on my list. And here we go, Philip Morris. Now, I like Philip Morris, but we're not going to do it this week, only because I don't ever buy at the high. It just doesn't make sense to me. Think about it. We're here to make money. When have you ever heard someone say, oh, look at Philip Morris. It's at the high of the year. It's never been this high. Let's buy some and wait for it to go someplace it's never been before. It's never been to 147, 148. So why the hell are you doing on my dime? No. Now, you see she goes up and she comes down. I'll buy it here. She goes up, she comes down. I'll buy it there. She goes up, she comes down. I'll buy it there. Up, down. I'll buy it there. Up, down. Because a stock does two things and only two things. It goes up and then it comes down. And then it goes up and then it comes down. And guess what? Guess what it does after that? It goes down and then it goes up. That's all it does. Stocks do not come to your house, take the dog out for a walk. Do not come to your house and wash the dishes. Take out the trash, maybe mow the lawn. No, they go up, they go down, that is it. Once it goes up to a certain point, you get people like me say, ooh, profits. Take your profits and the stock comes back down again. And then it gets down low enough and people just like me say, ooh, it came down. What a deal. Let's buy some. What happens then? Then she goes back up again. Up, down, that's it. Oh, one-man army, 1%. Cool beans. Live chat is too blurry. I heard that over and over again. Now, this is a new camera that I have here, and it's a newer one than all my other ones. But yet, this is the only one where I get complaints when it's blurry. And I don't know what the hell's up with that. I could take it and turn it around, because if I turned it around, I wouldn't be able to see all the questions. Steve Tucker, if I like Philip Morris, I'll also like Altria, which is MO. Now, Philip, I do own some Altria. We'll get to that in a little bit, but right now, XRP Pilot wants to take a look at waste management. Now, I'm not going to bother with SCHD and QQQM only because XRP Pilot. I always tell people, never buy something you don't understand. Now, when I say don't buy something you don't understand, and then you ask me about a piece of crap like SCHD and QQQM, well, I know you're not paying attention and you're not actually looking at the numbers. Because if you actually look at the numbers at SCHD and QQQM, you will see that they're not consistently profitable. The profits go up, the profits come down. The profits go up, the profits come down. I don't want to put my money into a company such as that. Then take a look at what is the current rate of return for SCHD and QQQM. For those you don't know, it's easy to find out. Go right to Yahoo Finance. SCHD. Now we're going to go to the summary part of SCHD. Okay, right to the summary part. Oh, my hair's terrible. Okay, the yield for SCHD, 2.64% for the year. 2.64%. Now, silly me, I like to get 1% a week, which is over 50% per year. Maybe I should have went to college and I would invest in something that pays 3.6. No. Okay, now QQQD isn't any better. QQQD. Oh, it doesn't even have a yield to it yet. It's actually that young. It doesn't have any dividends. Okay, it doesn't have a yield yet. Yet it's going for 1684. What do the profits look like? What do the dividends look like? Historical data. I'm going to go to historical data, then we can find out what the dividends look like, because if the dividend is a portion of the profits, oh, he wanted QQQM. Oh, silly me. Sorry, QQQM. QQQM. Silly me. They're all basically the same pieces of crap, if you ask my humble opinion. All right. QQQM. Okay, dividends only. Okay, now we want to look at all the dividends, maximum dividends, all the way back to the beginning. Oh, come on. Really? 4 years of dividends and you think this is a good investment? Okay. 21 to 16. Now, from 21 to 16, that's a 5 drop. Well, 5 on 21 is 25%. Okay, so it's paying 21, and then it decreases it by 25%. And you think that's good. Then it goes to 18, then 17, which goes lower, and then it goes to 15, which goes lower, then to 19, to 21, to 25, to 27. Then from 27, it drops down to 25, another 10% drop. Then it goes to from 25 to 22, which is 3, which is 1. It was a 13, 14% drop. Then it goes to 25 to 38. Then to 35, another 8% drop. to 32, which is another 3, which is another 9% drop. Then it goes to 32, another 8% drop. Yeah, no. What the hell are you thinking? Seriously, you think this is good? There's no consistency in profitability. Consistency in profitability looks something like this. Hold on, I'm going to bring one up for you. Okay, this is what consistency of profitability looks like. All right. Let's go look at all of them. All right, here we go. You ready? 8, 9, 10, 11, 13, 16, 20, 23, 28, 31, 36, 39, 42, 46, 51, 56, 62, 68, 75, 83. Consistency of profitability. That means each and every year they make more and more and more money. QCOM doesn't do it. QQQM, that doesn't do it. SCHC, that doesn't do it. Let's get to waste management. It's just going to blow a gasket here. WM, waste management. Oh, terribly sorry. Waste management is a monthly optionable stock. What does monthly optionable stock mean? Well, let me just point out. February, March, April, June, July, September, January, blah, 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 blah. Monthly. Every month I can do it once a month, which means I can make 12 to 24% per year off of waste management if the chart if the charting is right. No, I don't do monthlies because monthlies just don't pay the same. Okay? Weeklies. 14 February, that's this Friday. 21 February, that's next Friday. 28 February, that's 3 Fridays away. 7 March, 4 Fridays away. 14 March, 5 Fridays away. 21 March, 6 Fridays away. Every single Friday, I can get 1% every week. That's over 50% per year. Monthlies, the numbers just don't work. Okay? Weekly options only. All right, let's keep on going. Philip Morris, we already did. I know you focus on dividends, but you have to consider options. Yes, I do options. I want to revisit Lowe's today. Top Debt Daddy wants to look at Lowe's. Dividend King Extraordinaire Lowe's. Here we go. Lowe's. Here we go. Ready? High, low. Where was it? Where is it? Look at the direction. Up, down, up, down, up, down. 256.44. It's currently at 258. Okay, you're barely making your 1%. Barely. Okay, 181 to 253. You want 257. Actually, you want 258, which is $2.58, $2.60, somewhere in that area. It's not quite giving it for this week, but we just lost out on Monday, which is 20% of the time value. What do I mean by that? Well, 20% of the time value is Monday through Friday. It's 5 days. If I jump in on Monday morning, I have 5 days of time value. Well, Monday's done and over with. Now we have 4 days of time value. Tuesday, Wednesday, Thursday, Friday. That's it. I just lost 20% of my time value. That's why I do all my trading first thing Monday morning, because I can get 100%. Now, if this was Monday morning, that would probably have been higher. Now it's lower because the day's already done and over with. All right, so you guys here, if we're not above 70 by 10 o'clock, we're going to reboot. So like, comment, share all that kind of nice, neat, fun stuff. Look at the numbers up there. This early in the day, we should have higher numbers. All right, so let's keep on going. Lows, we're on lows. Let's do that. All right, high, low, we already did all that. A year ago, we're at 230. We bottomed out in the beginning of July at 212. Here's our top right here. Okay, the middle of October, 278.01. All right, she drops down here. Here, look at 90 days. The high and the low. Where was it? Where is it? Look at this. Down, up, down, up, down. Okay, what's happening right here? That could be a spot where it's turning around. That's what I want to see. As she's coming down off of a high here, coming down, she's going to turn around and go back up again. What is the setup look like at this moment? Let's go back to the last 10 days. Right there. Last 30 days, sorry. So 30 days ago, we're at 244. That's the bottom, 244. She shoots up to almost 269. So 244 to 269, that's 53. That's 53 bucks. That's 20%. That's a 20% increase. If you think a 20% increase is not going to be profit taken, all righty, you believe what you want. Okay, so it's coming down from here, dropping down here. Our bottom was yesterday or Friday. Okay, right here on Friday, we bottomed out at 251.35. Well, we're at 256 today. Well, that's one day to the upside. I love 2 days to the upside before I jump in. Okay, so you get your bottom here, 2 days to the upside, jump in. Bottom here, 2 days to the inside. Okay, when it comes down off of your profit taking, your high, it's a 20% increase. Within 2 weeks, profit taking, she's coming down. It's not that difficult to read it. All right, so 256 at the moment. If you like it, fine. That's what the numbers look like. What does Lowe's usually do this time of year? Well, this time of year, looks like she's going to go sideways right up, this week here. And then in the middle of next week, she's going to dip down a little bit. All right, so if I was going to do lows, I want to get in and out within just this week. So I'd want to do one at the 255. So you get it at 258.99, so the 255, that's not enough money. Sorry, the numbers just don't work. Sorry. Amir Khan, thank you. 56. You should not be giving advice. DD, thank you very much. I don't give advice. I love it when people say that. You shouldn't give advice. Well, I don't give advice. AC Wolf, Energy, Minerals, Mining Companies, any likes? Okay. XRP Pilot, Waste Management, no. Pepsi, nah, premiums just aren't good enough. Walmart, let's take a look at Wally World. Oh, let's go back here for a second. Wally World, WMT. Yo, hell no. Apple. Ooh, that looks interesting. Hold on, let's see what it looks like. Okay, here's the high, here's the low, here's where it was, here's where it is. Look at this. Down, up, sideways, up, down, sideways again, 227. The 227s are going for 269 to 275. Definitely you get your 1% there. You know what I really like about Apple? Wait until you see the seasonality for Apple. Looks awesome. All right, so a year ago, we're looking at 189. We bottomed out in April. This was right around where, wasn't this right around where they had that lawsuit in Europe and they had to pay billions of dollars, millions, whatever it was? Crazy number. 164 was the low back in April last year. Look at the last 90 days. Okay? The high, the low, where is it? Look, it's up, down. Here we are right here. Not an ideal time for jumping in. At least it doesn't look like that on the 90-day time frame. The last 30 days. All right, so the last 30 days, 240 down to 220. That's a 10% drop. Then it goes from 220 to 247. That's 47, 10, 15, 12. About 11%, 12% increase. That comes back down. Now she's going sideways, 227. The 227 is going to 1%. Okay, fine. But what's my favorite thing about Apple? Take a look at this. You're going to love this. Let's slide this. Seasonality. Let's slide this all the way over this way. Take a look from January, the beginning of January to the end of December. A nice upward trend. Or you could do it this way. Jump in 1st of January, get out middle of February, get back in the end of March, and get out at the beginning of September, and then jump in the beginning of November. Well, you get to get all 4 of those waves. Look at 1, 2, 3, 4. Looks good to me, if you like Apple, of course. Now, where are we now? We're right here. So hypothetically, this is what usually happens to Apple at this time of year. Now, Apple's been around long enough for us to know. Well, right about now, Apple has a tendency to drop. Now, is that what's going to happen? No. It's just what has happened over the last 10 years. So you take the data from 2015 and you lay it on top 2016, 2017, 2018, and then you come up with the average numbers. And the average numbers has Apple going down this time of year. So no, I wouldn't be jumping into Apple at the moment. Microsoft, huh? XRP pilot. MSFT. Whoops, I want to change that. Okay, interesting. All right, let's take a gander. High, low, where was it? Where is it? What's the direction? All over the place. No real rhyme or reason. But the main thing I'm looking for, it's not at the bottom, it's not dropping, and it's not at the high of the year. So that's a no. Okay, so where are we? We're at 411.32, which is right around 411, 410, 412, 380 to 4. No, we're not getting our 1% here at all. So I get it, we're there. I sell 110. I lose $1.32. No, sorry, you're not getting 1% out of Apple or Microsoft. Sorry, so you're not getting the numbers. It's just not working. So no. Does your portfolio beat the S&P returns year to date? Every single year for the past 15 years. He doesn't do paper trails. I have no idea what a paper trail is. Oh, you're talking about, hold on a second. Are you talking about this right here? Right there, and hold on a second. Yeah, here's all my purchases over the last year. Okay, you can pick on any single one of these. Anyone. Okay? Micron, Mara, Alley, Riot, Riley. That was, what month is this? Week. Week number 42. Okay? Week 42, 2.5% on that one account. I gotta look at the numbers here and there. Why is that? We're redoing the website. That's what it is. But if you look at all the trades I've done every single year, this is just this year. Okay, this is, what week is it? Week number 29. Walgreens, Siri, Southwest Airlines, Walgreens, Wells Fargo, Macy's. What did I make that week? Okay, 2.96. So I average 1% a week. Some weeks I make more than 1%, some weeks I don't. But yeah, all my trades are posted online, just in case you're wondering, for those who said I don't do a paper trail. Okay, XR Pilot, personally waiting on LAC to pop. What the heck is LAC? LAC. Lithium. Okay. $3 a share. Okay. Here's the high, here's the low, here's where it was, here's where it is. Up, down, up, down. Okay. What does this company normally do? Let's take a gander. LAC. No dividends at all, so why we even bother looking at it? Summary for LAC. Come on. There's almost no information on it whatsoever. Earnings per share, negative 1.5. Negative 0.1. Yeah, no. Terribly sorry. Okay, hey, if it works for you, more power to you. There's many things to do. I mean, there's over 9,875 different companies you can invest in at any time you want. Just choose one that makes sense to you. Okay, LAC doesn't make sense to me whatsoever. Just got number 3, just got bum, 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 bum. Does your portfolio beat the S&P return? Yes, it does. How do you roll options to avoid assignment? Well, that's easy. Let's see if we can do one. Let's go here. Let's go here. Let's go here. Let's go there. Let's take a look at UPS. Create a rolling order right there. Okay, so creating a rolling order is really not that difficult. So I have a position here, the 114 for this week. See right here where it says 14 February, 21 February. So I'm going to be buying back the 14 February, which is this week, and then I'll be selling next week's 21 February. But right now, the price is only 9 cents per share. that's really not worth it for me. So I'm just going to leave it alone and not do anything. But that's how you roll it forward. You just click on roll order and it automatically fills it for you. But there's a roll order right there. It's not that difficult. Now, if you're curious, this is being recorded, so you can watch that over and over again if you feel the need to do so. Okay, let's go back to that one. All righty, let's get out of there. All right, let's go pick on another one. Another one. All right, you know just enough to get people in trouble. DD, thank you very much. No, DD, I have no idea who you are. You're relatively new, and it's always lovely to have haters. But if you have a specific question or a specific query, or you have something you want to challenge me on, hey, other than saying, you know just enough to get people in trouble and I really shouldn't be giving advice, why don't you ask me a question that you think I cannot answer? That's a good one. Or what makes you think I don't have enough intelligence to tell people? This is the fourth time you've asked me if my portfolio beats the S&P. Yeah, I made 63% last year, made 45% the year before that, well over 25% every single year. You meme trade? No, hell no. B-Rad Daddy, Kismet. This is the fourth time you asked that question. LVM, good evening and welcome to the show. Craig Lee, how are you today? Teach me, brother. Okay, what's happening, Mr. Craig Lee? Palantir, Caldwell Cutie. Oh, come on, my dear. You and I had a conversation. Why would you be asking me about PLTR? PLTR. Hell no. Why the hell? All right. Now, you and I, okay, Caldwell Cutie, you and I actually had a conversation. When have you ever seen me ever suggest a company at the high of the year? Okay, what are you thinking? Okay, I don't buy at the high of the year. I've never ever heard anyone say, hey, let's buy it. It's at the high. It's never been this high before. It's never been this high before. So why are you buying it now? Can you check out Philip Morris? Honeywell, we already checked out Philip Morris. Are you a day trader or a swing trader or position trader? I'm a cash flow trader. That's the way I like to look at it. I'm a cash flow trader. I trade specifically for cash flow. That's my main objective. Simple, safe, predictable, consistent cash flow on a weekly basis. That's my genre, if that's what you want to call it. All right, Steve Tucker wants to take a look at Altria. Okay, now I do have some Altria. In case you're wondering, 53. Damn it. I don't have Altria in a good position is what I got. Anyway, here's the high, here's the low, here's what it was, here's what it is. Look at this. Up, down, up, down, up, down, up, down, up. Okay, great. It's in an upward trend. You can't really argue with it. Here's the high here at 58. She dropped down here to 50. Now she's going back up again. Okay, simple, right? What is it paying? Right now, 53.98, the 54s are going for 32 to 36. That's not 1%. Unfortunately, even though I already have some Altria, I wouldn't be buying any at this moment in time, regardless of what this says. Okay? And I wouldn't be buying it now anyway. Look where it is. It's almost at a 30-day high. Your 30-day bottom was last week at 50. Now it's at 53.84, which is just below, it's right around 8% in a week. Yeah, no, sorry. All righty, that was Altria. Okay, Steve Tucker, it almost like low bandwidth on your YouTube channel. Okay, One Army Money. I am from Canada. What's the best coin play? I don't do coins at all. Okay, Mohammed, you're welcome. Are you in Brazil? No, I'm not quite sure why you'd think I was in Brazil. I'm in St. Petersburg, Florida, where it's warm and sunny all the time. It was nice and warm today. Had to turn the air. You believe it? It's February, and we had to turn the air conditioner on. Not me. Other people in the house, they got a little cold. All right, let's keep looking at some of these questions. Okay, what do I think of Intel? Love Intel. I actually own some Intel at the moment. Oscar, what about Palantir? We just looked at Palantir 2 seconds ago. TSMC. I know what TSM is. What's TSMC? All right, let's take a look at Intel for Oscar. Oscar wants to take a look at Intel. INTC. Now, I do have some Intel. Interesting. Let's take a gander. You ready? Let's move this over a little bit so you get a better view of the chart rather than numbers. Here's the high. Here's the low. Here's where it was. Here's where it is. Look what it's doing. Sideways down, sideways down, sideways. 1977 is where we're at the moment. Holy cow, 1977. 7th grade, junior high school. Oh, shit. No, wait a minute. Mrs. Black. That's who. Oh, Mrs. Black, 1977. Okay, 1969. The 1950s are going for 56. That's nice. The 20s are going for 32. Both of those sound good because both of those are over the 1% that I'm looking for on a weekly basis. Now, I only look at about 300 companies. That's it. And I don't look at them all at the same time. I only look at about 10 or 15 companies every week because they have their dividend coming up. Why do you think that is? Well, if the dividend is coming up, that means the stock has a tendency to increase in value just before that. All right, Oscar, let's take a closer look at Intel. All right. A year ago, we're at 44. Okay, a couple of weeks later, 46.70 is the top of the year. Drops down to a trading range of 30, goes sideways for a couple months, drops down in July, the end of July, the $20 area, and just stays there for what? What is that? September, October, November, December, January, February. Yeah, quite a while. All right, so the last 30 days, this is like a good opportunity. I like this chart. Okay, 30 days ago we're at 1950. We dropped down to just below 19. Shoots up to 22.5, drops down here. Here's a new bottom here. 1, 2, 3, 4. 4 days to the upside. It's definitely coming off the 30-day high, bouncing off the 30-day bottom, going to the upside. 1969 is the current price at this moment. The 20s are going for 32 cents. That is 1.5%. So for the fun of it, let's quickly take a look at the seasonality. What does this stock normally do this time of year? Okay, here's where we are right now, February 10th. It's definitely going to the upside for the next 3 weeks. No, next 2 weeks. And then she starts to come down. So, okay, good. A good two-week play. Usually. Now, it doesn't guarantee that's going to do. Just that's what it's done in the past. So let's do a 20 call strike. Let's do a sample trade right now. This is going to be a sample. Just so you have an idea of how it works. It's not that difficult. Now, if you're using Think or Swim, it's very easy. If you're not, I don't know which trading platform you're going to use. I'm going to do this example, then we're going to reboot. Okay? It's 10 o'clock. Those numbers should be a hell of a lot better than that. So we're going to do, first and foremost, I'm going to change it right here. We're going to change that to a covered call. That's where we buy the stock, sell the option, blah, blah, blah. The 20's right here. There we go. Now I want to change it to do just one contract. That way the numbers don't scare you. And I always change limit order to market order. Now the reason being, a limit order can sit on the computer screen on the market maker. He's not required to fill it if he doesn't want to. If he doesn't agree with the numbers, then he doesn't have to. But a market order, he is required by law to fill it instantaneously. If market order pops up, he's got to fill it. That's it. Those are the ones I look for. The nice thing about a covered call, buying and selling at the exact same time, the option and the stock are tied together. So you buy in the stock, you sell the option at the exact time. I already know what I'm making on the trade. Most people buy a stock and they're going to wait. Is it going up? Is it going down? What's it doing? But once you incorporate stock options, okay, if I buy the stock, I sell the option against it, I'm getting cash flow instantaneously. So tomorrow morning, this will fill instantaneously. I will spend almost $2,000 to buy the shares, and my profit will automatically go into my account. I'll own the shares. I'll do whatever I want with the shares. But I'm selling somebody the rights to buy it from me for more than I just paid for it. All right, so let's take a look. What does it sound like? Here's the order. You ready? Buy one covered call Intel 100s. That's the weekly. 14 February 25. That's this Friday, meaning the option expires this Friday afternoon. The $20 call option against the Intel stock at the market to open. It may sound a little confusing, but a covered call is relatively simple, safe strategy. If you have difficulties with it, call your broker, have him walk through with it. Also, there's literally hundreds of videos available on YouTube. How do you do a covered call? What's the risks and rewards of covered calls? That's a very safe strategy. Okay, so maximum profit on this one contract right there, $63.50. It may not sound like a lot, but let's go through the whole equation so you understand it. Now remember rule number one, never buy something you don't understand. If you don't understand Intel, well then don't buy it. Okay, if you're not okay with buying it, owning it, and holding on to it, don't buy it. It's that simple. Okay, so a covered call, simple, safe strategy, $63.50 is the profit on one contract. Let's get rid of this. $63.50 divided by, now here's the important part, to find out what your rate of return is going to be for the week. Now, this is just a weekly trade. Okay? Now the 20 is one possibility. You could also do the 1950. The 1950 is a safer trade. Okay, 63.50. We're gonna divide it by what it cost us for the trade. Cost of trade, including commission and fees, 1,937. 1,937 and 16 cents. Okay, so that gives me a grand total of 3.2%. Well, 3.2% is more than 1%. Well, that works for me. Okay, is it guaranteed? No. What's going to happen tomorrow morning is the numbers for the options are going to change. They are going to fluctuate. But what's not going to change is the mathematical equation. Okay, so it's 3.2. So let's get this out of here. Okay, you see all these numbers here? The bid, the ask, the open, the close, the high, the low, the volume, all these numbers. When the market is open, they constantly change. But what never changes is this equation. That's the purchase price right there, the ask price. Okay, right now it's at 1969. The closest strike price is the 1950. Or you could do the 20. We just did the 20, and the 20 says, well, it's more than 1%. That's what I'm looking for. So when the market is open, that's when you do your math. Okay, you find out, what can I buy it for? What can I sell it for? Is it more than 1%? Then it always comes down to, am I willing to hold on to Intel? Okay, am I willing to hold on to it for as long as it takes until I hit my target? Because the nice thing about Intel is I can get over 1% on the 14th of February. If it doesn't hit my target, well, I could do it again on the 21st of February, which is another over 1%. And then I could do it on the 28th. And then I could do it on the 7th of March. And then I could do it on the 14th of March. It takes me 10 or 15 minutes every morning to do 5 or 6 positions. That's all I have in each account, about 5 or 6 positions. Because I roll it. I don't hold on to anything. The longest I've ever held anything was 9 months. And I didn't do it because I wanted to. I did it because I bought the stock and it dropped. But here's the thing. In that 9-month period, I collected 3 dividends and over 30 premiums, which means I collected a premium almost between 0.5% and 2% every single week. for 9 months on that one stock. Okay. So, Oscar, Palantir, no. Okay, no dividends, no thank you. Pretty simple. Oscar, TSMC, what, that Taiwan Semiconductors? No, that's not. TSM is Taiwan Semiconductors. So what's TSMC? TSMC. Oh, TESMEC. What the heck is that? Okay, TESMEC isn't anything. Can't find that symbol. But TSM, Taiwan Semiconductors, if that's what you're talking about. Okay, here's the high, here's the low, here's where it was, here's where, look at this. Up, down, up, down, up, down, up, down, up. Okay, 207 at the moment, 208. Okay, 208. Holy shit, nice, look at that. The 207.50 is going for $4. That's over 2%. That makes sense to me. KB, what's happening? Philip Morris. Okay, Howell. Garrett Howell. We already looked at Philip Morris earlier. Ben, yo, what's happening? All right, Ben SD. PayPal, no. No dividends, no thank you. Don't. Okay, all right, PayPal's no. Look at Philip Morris. Okay, it's a little bit past 10:15. We're going to reboot just for the fun of it, see what happens. Okay, so let's go over this way. All right, we'll take a look at Randall. We'll take a look at U.S. Steel once we get back. I'm going to reboot. I just don't like the numbers. You guys over on YouTube. YouTube world. Say, let's do this one more time. One more time. If we tried. One more time for all the old time. All right, so we're rebooting. While we're waiting for getting there, let's take a look at TSM. Wait a minute. No. We won't look at X. So TSM, Taiwan Semiconductors. All right, so let's take a look at Taiwan Semiconductors. A year ago, we were at 133. Now, we bottomed out the year at the end of February at 122.91. Well, from there, it's a nice run up. Look at the last 90 days. All right, so the last 90 days, the last 3 months, here's the high, 125. Here's the bottom, 180. Nice movement, up, down, up, down, up, down, up, down, up, down, up. Okay, so it's at 27.95. Okay, it's at 27.50, going for 410. That's over 2%. Well, I like 2%. 2% works for me. Okay, so let's keep on going. The last 90 days, the last 30 days, here we go, last 30 days. Okay. Down, up, big gap down, up, gap down again, up. Now she's down. What's happening here? Now, what does Taiwan Semiconductors usually do this time of year? Yeah, I don't think so. I'm going to say no to Taiwan Semiconductors this year. Randall Ray, we're going to take a look at that any second now. Let's see who's here today. Who's here? Raffaello, Harry, Pike, Bob, King. All right, King. Dude, really? We looked at SMCI earlier this afternoon. It's going to be no. Okay, when I say I like consistency and profitability, King, seriously, go take a look at how consistently the profits increase on SMCI. It's not consistent, SMCI. Wait a minute, is that the same one? SMCI. What is that one? Super microcomputers. Interesting. Oh, SCHD. Oh, I was thinking SCHD. All right, hold on. I'm examining the numbers over here. All right, here's the high. Here's the low. Here's where it was. Here's where it is. Look at this. Up, down, sideways, down, sideways, down, sideways, up. Okay, 42.65. Look at the 43s. That can't be right. That can't be right. 43 should be 43 cents a share, not $4.45 a share. That number's just not right. I'm going to have to check that tomorrow morning. But seriously, look at it. The 42.40, so the 43 is going for 4.45. This one's going for 4.90. Those numbers aren't right at all. That's weird. All right, last 90 days. Okay. Sideways down, up, down, up. Okay. Can it continue going up? Don't know. Let's take a gander. Oh man, that's a 30-day high. I don't like 30-day highs. All right. You can't really mistake that. Jumps up nicely for the next couple of weeks. All right. I want to go to Yahoo Finance and find out more information about this one. It's piquing my interest. Okay. SMCI. Oh, no dividends. What a bummer. Earnings. Earnings are tomorrow. That's why it's so damn high. Okay, earnings date, February 11th, tomorrow. I'm kind of curious. No dividends, though. So why are we looking at it if it has no dividends? And look where it is right now. Right now, it's at 42.28. Look at the one-year target. Well, the one-year target's lower. Why the hell would we buy something that they're expecting to go down? Yeah. So no dividends, no thank you. Sorry. Yeah. Let's go back to where we were. But that's crazy. I mean, you got to really like that. Seriously, you got to really like it. Because right now, you can buy it and you can get a 10% return. That's 10% for 4 days. That's crazy. But you're going to have profit taking pretty soon. That number, you're not going to get a run up from 26 to 42. So 26 to 42 is $16. 26 right there. 42.65. That's a $16 increase. That's more than 50% increase. So that's about a 55% increase in 1 week. So a 55% increase in 1 week. Do you think there's going to be profit taken? Well, more than likely there's going to be. Hold on for a second. Let's see something here. Just for the gamblers out there. Okay, for you gamblers out there, you could sell a 30 put. 30's right down here. And get over 2%. If, you're okay with that. But there is going to be this is just my humble opinion. Is it guaranteed? No, it's not guaranteed. But you can't argue the numbers. From the low last Monday to today's high, that's over a 55% increase in 1 week. Yeah, more than likely there will be profit. Is it guaranteed? No, nothing's guaranteed except for death, taxes, and disappointment. All right, SMCI. Sorry, dude. Sorry, King. 57. Exact same number. Tariq, Carly, how are you? In Sydney, Australia, how are you doing? Footer. That's a weird name. Okay. Peter Chow, how are you doing, Peter? 86 is in the house. All righty. Randall Ray. Randall Ray wants to take a look at Z. What the heck is Z? Yeah. Okay, Randall, come on, dude. You've been here long enough. You should know better. I don't buy anything at the high of the year. No. Okay, let's take a look at US Steel. Now that looks better because see the highs up here, the lows down here, and we're somewhere in between. Well, that makes sense because it's been here before. Okay, I don't want to blaze new trails. I'm not a frontiersman. You know, so why do I want to go someplace that they've never been before? Anyway, here's US Steel. I do own some US Steel. And I got US Steel at 41. Okay. Right now it's at 38.70. I got it at 41, which is way up here. So yeah, I'm still losing on my US Steel, but I do make over 1% every single week with my US Steel. So I have no problem holding on to it. Manny wants to take a look at Johnson & Johnson. All right, Manny, we're going to take a look at that in a little bit. Let's finish up with US Steel first. A year ago, we're at 48. The bottom of the year is down here at 27. That was back in September. Shows down, basically sideways, a little dip here, a little dip there, but still basically sideways. Stays in that little trading range between 38. All right, so let's take a better look. Oops. There we go. 40 jumps up to 43, falls down to 30, back up to 42. Now we're at 38. Okay, does it make sense? Well, depends. Do you like US Steel? Okay, I like US Steel. Now, what does US Steel normally do this time of year? Well, normally, not a whole heck of a lot. Look at all that choppiness right here. Now, it doesn't look that bad when you break it down this way. So, historically, she's going to go sideways for a little bit, and then she's going to go up all the way into the middle of March. Well, I'm good with that because I own some US Steel. And I'm going to continue selling covered calls all the time, every single week, week after week after week. So once you own the stock, you can do anything you want with it. So yeah, I do own it at 41. Okay, I own it at 41, which is way up here. But look what the 39s are going for. 72 cents. I have no problem with that one. I can even go to the 40s and it's getting 65, which is still over 1%. I can go to the 40, 50s, which is way up here and still get over 1% with US Steel. I love US Steel. It gives me 1% every single week, even though it's lower than I originally jumped in. I jumped in at 41, and this thing hasn't been at 41 for quite a while. So yeah, I've had 41. I have had US Steel at 41 for quite a while. Hold on, just for the fun of it. Beginning of December. Okay, so I got US Steel at 41.25 the beginning of December. All right, so that being said, let's move on to the next one. What do we have here? Raffaello, Verizon, huh? VZ. Wait a second. We had one over here, Johnson & Johnson. Sorry, Raffaello, we had Johnson & Johnson first. Let's take a look at J&J. J&J is going to be quick. It's always a no, only because here's the high, here's the low, here's where it was, here's where it is. Look at this, up, down, up, 154. The 155s are going from 57 cents to 65 cents. That's why it's usually always a no. Don't. I like the setup. Thank you, King. So, Manny, terribly sorry, Manny. Even though you may like Johnson & Johnson, and yeah, she's coming off. The high is right there back in August. She drops the end of the year in December. Now she's going back up. Great. If you like it, I wish you the best with it. I don't do it only because the return that I get on a weekly basis is not 1%. So I don't do it. I don't think I've ever bought Johnson & Johnson. Even though they've been in business for over 100 years, they've increased their dividends every single year. So why not do it? Well, I don't do it because it just doesn't give me enough. There are other companies that give me more money. So if I'm going to invest my money, I want to put it in the best place that I think is best. Now, I like Johnson & Johnson, don't get me wrong. The dividends are great and they increase every single year. But the premiums do not give me 1%, and that's what I'm looking for. I'm looking for consistency and profitability for me. All right, that being said, what the hell, we're below 49. Damn it. All right. Val, hey, James, can you take a look at CRTO? I don't know why we're looking at CRT. I never heard of it. CRTO. Oh, no. There it is right there. It's a monthly. Monthlies just don't work. Okay, you cannot get 50% a year using monthlies because you can only do it 12 times. Okay, once per month. That's what it means. Monthly, once per month. Yeah, no, sorry. Austin, what's up? Snowball effect. Cool beans. Thank you for this. You're welcome. No dividends. Thank you. Yep, you're right. SMCI. Nope. ET. Okay, your mom. I don't like energy transfer. No. ET, and here's why I don't like energy transfer. Are you ready? Well, see these numbers here? The current number right now is $20.13. The 2050 is going for 11. That's 0.5%. And once you go below that, it's almost nothing. Okay, the premiums are absolutely horrible with ET. There's certain stocks where the numbers are just terrible. So if I'm going to buy it at 2013, I sell the 20s, I'm losing 13 cents, which means I'm only making 17 cents, which is not 1%. So I don't, ET is one of the few companies that doesn't give me a good return. Their accounting firm canceled them. Yeah, probably. Anthony, Apple. We looked at Apple like 15 minutes ago. Did you happen to look at T? Yes, I always look at T. This is my preset. Okay, here's my preset, AT&T. It's at the high of the year also. No, sorry. Tyson, TSN. Aren't they a monthly? TSN? Isn't Tyson a monthly? Yeah, Tyson's a monthly. Okay? Monthly, the numbers just don't work. Okay? Numbers just don't work on monthly optionable stock. Maybe take puts for earnings. Well, that's going to be totally up to you. We looked at the earnings, on that. Anthony, Apple, we already looked at that. Randall Ray, we already looked at US Steel. I got another one. BBAL. Was that BBAI? BBAI. Big Bear Holdings. Big Bear Holdings. Why have I never heard of this company? BBAI. Okay, have a minor problem, dude. No dividends, okay? Forward dividend and yield, nothing. EX dividend date, nothing. No dividends, no thank you. 1 year target. Dude, seriously, did you see this? Right now, the stock is at 867. Okay, previous close, 859. Look at the 1 year target, 475. Oh, hell no. Hell no. Okay, Jutu, yep, we looked at US Steel. Randall Ray, we looked at US Steel. Okay, King, we looked at BBAI. J2K, hello. Okay, we're looking at, here, it is, right here, BBAI. We're just looking at it, okay? Please, just only do it once. I do read every single comment, okay? So please, ask the question once, only once. That's okay. Okay, he does only dividend stocks. Thank you. Can you look at Lockheed Martin, LMT? Okay, thanks 86. LMT, 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 Lockheed Martin, here we go, is on the list. Okay, the high and the low, where was it? Where is it? Look at this. Up, sideways, up, down, 448. It's actually coming down looking for a new bottom. No. Okay, I don't like, we'll keep our eye on it because here we got 30 days ago, 480, she dipped, shoots up. Here's the top right here, 510. Gaps down, keeps on going. Now we're at 440, but it's still dropping. So I'm not going to jump into this until I see 2 days to the upside. Okay? So that being said, note LMT for this week. Now, what is the price right now? 450. The 450s are going for 370 to 380, not quite 1%. So the numbers just don't work there. I'll get to it. Thank you, 86. Dun, 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 dun. Hey, James, which stocks did you use for covered calls today? Ooh, what ones did I do for covered calls today? Hold on a second. Dow, Consolidated Freights, Micron, RCL, QCOM, Ford, Nextera, Mara, Lowe's, and General Motors. BISD. Okay, Jeff James, we looked at PLTR already. I know, no dividends, but man, the growth. All right, Jeff James, I understand what you're looking for. You're looking for capital growth. Sorry, dude, you're in the wrong place. That's not what I'm looking for. You're basically just wasting your time. I'm looking for a simple, safe, predictable, consistent 1% per week. Now, I use what's called a covered call, bouncing off of a dividend stock just before the EX date. I know it sounds a little complicated, but it's relatively simple. It is so simple, I actually created this strategy for my 9-year-old daughter back in 2008 when she wanted to learn what Daddy was doing. Daddy, what are you doing? Can you teach me? Okay, I thought it was interesting at the time. We had fun. We enjoyed ourselves. We played games and we made it fun. Okay, great. So that being said, I have certain rules. Rules are never buy something you don't understand. That means look at the numbers. What's the high? What's the low? What is the annual growth? What are the dividend increases? Stuff like that. Don't buy anything unless you understand it completely. Number 2, never sell at a loss. It defeats the purpose of the whole game, and it is a game. 3, consistency of profitability. I personally do not want to invest into anything that's not consistently profitable. It just doesn't make sense if it's not consistently profitable. 4, weekly options only. It's really not that difficult. 14 February, that's this Friday. 21 February, next Friday. 28 February, next Friday, so on and so forth. Each Friday, one of these expires. Weekly options only. And rule number 5, make sure the numbers work. What am I buying it for? What strike price am I selling? What's the closest one to my purchase price so that I'm safe? And then is the premium going to give me 1% or more? It was created for a 9-year-old. It's really not difficult. So yeah, Jeff James, I'm not looking for growth. I'm not. Okay? I'm looking for cash flow. When you retire, you can decide whether you are, because at my point in my life, I have no desire, nor am I financially capable of taking a fat chunk, put it in a side, and just waiting for years for it to grow into something that I can spend. Because, believe it or not, we as human beings are the only species on the planet that got to pay to live here. So the money's got to come from somewhere. And when you stop punching that time clock, the money's got to come from somewhere. Okay, BizD, Tim G, BizD. What the heck is BizD? B-I-Z-D. No. Okay, now Tim, monthly options for me just don't work because there's 12 months in a year. You can only trade them option once per month, and 12 times a year just doesn't come up to 50%. It means I'd have to make at least 4 or 5% with each option trade. And there is no 4 or 5% with each option trade. Okay, so right now, BizD right now, 1723. Okay, the 18 is going for 0 to 30 cents. Okay, what the hell does that mean? The 19 is going for 5. Yeah, no. See, the numbers just don't work. I'm not going to hold it for 3 weeks. No. Okay, they just don't work. Sorry, dude. Okay, let's keep on keeping on. Ooh, Jamar wants to take a look at Nike. Now, I like Nike. NKE. I don't have any Nike at the moment, but look what happened here. That looks interesting. Year ago, now look at the movement. Down, sideways, big down, sideways, down again. Right here, we're bouncing off that bottom. That looks interesting, but let's zoom in a little bit closer. Okay, here's your last 90 days. Sideways, it jumps up. Here's your high at 79. Got your profit taken, brings us down here to 69. It's a $10 drop. Well, a $10 drop on an $80 stock is a little over 10%. It's a 10% drop. So bottomed out yesterday, Friday, and today she opened up higher and she kept on going. So yeah, could it be on an upward trend? It could be. What does it normally do? For that, we need seasonality. Seasonality is basically 10 years of stock movement. Look, the blue line represents the movement this year. Okay, all the way to the left is January 1st, all the way to the right, December 31st. Look at the movement. This is here. Okay, basically goes down the first part of the year and goes sideways, and then she goes up in the fourth quarter. So the first quarter she goes down, second and third quarter she goes sideways, and fourth quarter she goes up. Well, it's really not that difficult to see, and you can understand why. Okay, who wants to buy sneakers in the winter? Okay, so here's where we are. So basically, hypothetically, for the next week or two, we're going to go sideways, and then towards the 23rd, which is the last week of February, she's going to start going down. So for the next 2 weeks, she's going to go sideways, hypothetically speaking. This is historical performance. It's not guaranteed. It's just what has it done on average over the last 10 years. So let's keep on going. So the 71 at this moment, because right now it's at $70.91, the closest strike price is going to be the 71. It's going from 96 to 97. Well, that's over 1% if you like Nike. So let's do one. Let's do a sample on Nike. Let's get rid of this. Let's change this to covered call right there. Let's go to 71 right there. 71. One contract. There it is at the market. There we go. And confirm and send. Here it is. Buy one covered call of Nike NKE 100. That is the weekly. 14 February 25. That's this coming Friday. The $71 call strike option against the Nike stock at the market to open. That's the order right there. Okay, here's the break even, $69.94. The maximum profit, $105. $105 for one contract. Well, what's going to happen if it's above the 71? Well, I get all my money back. Well, we're investing in companies. We're buying shares of Nike. We're owning a part of the company. Okay, so if we own part of the company, we put $7,000 in. We own 100 shares. We're entitled to, the dividends, and we're selling it to someone for more than for what we just paid for it. All right. That being said, bring out my calculator. Clear that. 105 is the profit divided by the outlay, $69.97. No, $69.95, $7,000. That gives me a grand total of 1.5%. 1.5% for 1 week. Well, that's over 75% for the year. Okay, but do you like Nike? So let's say you buy Nike. Okay, you buy a couple hundred shares. You sell those contracts against it. And every single week you bring in 105 per contract. Well, that's 1.5% every single week. 1.5% every single week is over 75% for the year. What's wrong with that? All right, let's keep on going. All righty, next. Keep on, keep it on. Uh-oh, what was that one? RK, Johnny Boy, what the heck is RKLB? I never heard of that. Let's get out of that. Let's get out of that. Let's get out of this. Let's change this. Let's go back to here. RKLB. It just sounds like a no. And RKLB, Rocket Lab. Oh, RKLB. RKLB. Now, didn't Rocket Lab come up with a really interesting computer lately? Okay, so here's the summary. Oh, what a bummer. Look at this. Earnings per share, negative 43. It means they're losing money. Dividends, no dividends. It's currently at $30, and they have a one-year target at 25. That right there is a big fat no to me. Big fat no. Number one, no dividends, no thank you. Number two, negative earnings per share, no. Okay? The yearly target is less than the current price. Really no. Sorry. Ooh, Jutu wants to take a look at General Dynamics. GD, General Dynamics. Interesting. Here's our high, here's our low, here's where it was, here's where it is. Look at the movement. Up, down, up, down. Okay, here we are right here. What's happening? It's currently at 258. The 257 is 185 to 235. That's not 1%. Sorry. Okay, no 1%. No, thank you. Atom. Okay, Ethereum. Okay. Talk back to me when you have options against Ethereum and I can actually do something with them. Ethereum is not good as Litecoin. I don't even do Litecoin. Oh, look at this. We're done with all the questions. Holy cow. Kinder, Wes wants to look at Kinder Morgan, KMI. KMI is a dividend king, which means they have consistently increased their dividends for more than 5 decades. Well, 5 decades, that's 50 years. 86, you want to take a look at Key Bank? All right, we'll take a look at Key. All right, here's the high, here's the low, here's where it was, here's where it is. Look at this. Up, down, 27.50. The 27.50s are going from 5 cents to 19 cents. Can we all say it at the same time? Hell no. Okay, 86 wants to take a look at Kinder Morgan. Kinder Morgan. Okay, we already did that one. 86 wants to take a look at Key Bank. Now, Key Bank is on Warren Buffett's list, so that's a good one. Okay, high, low, where was it? Where is it? Look at this. Up, down, up. 1750 to 1750, 27. Okay, 1750 is going 23 to 26. Well, that's over 1%. Always check the numbers. What are you buying it for? What strike price is closest? What premium am I collecting? And is that 1% or more? Well, that's the way I do it. I don't tell people what to do, and I don't say, yes, no to anything that you guys like. I'm just showing you what I do. Okay, and I share my trades online for you to see. Yes, I have 0 losses so far this year, but we're only, 7th week? That's not that difficult to do in 7 weeks. All right, so that's Key Bank. We're not getting 1%. It's going to be 86. Okay, the numbers just aren't working for Key Bank. Not even worth taking a look at this. And she's in a downturn right now. Jump a little closer. Okay, here's your bottom, the high, down, up. Now she's coming back down again. Not time for jumping in my humble opinion. I've been wrong once or twice. Mo Fish wants to take a look at KC. What the heck is KC? Hell no. TEM. Tempest AI. TEM. Tempest. La 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 la. No dividends. No thank you. Okay, 1 year target. Okay, what is it with you guys picking stocks that have a low 1 year target? It's currently at 68.85. They get a 1 year target at 58. No dividends, earnings per share negative $5. This company's losing money hand over fist, and they have it projected as going lower next year. So why are you looking at it? Do you research numbers, or are you relying on me to do it for you? 86, we looked at key already, okay? LYB, I never even heard of LYB. LYB. Nope. DOYU. DOYU. It has no options. That's a definite no, and it's at the high of the year. What the hell are you thinking there, brother? Nike, we already looked at Nike. Phil McCracken, you have a very insecure connection. Anyone with a basic skills can get any packets your device sends and receives. Okay, Phil, thank you for that. Not quite sure what it all means, but alrighty. Now, I'm terribly sorry if the connection's not that good. You can go to another channel, because we got TikTok, YouTube, Instagram, Facebook, and another TikTok, and another and another YouTube. So there's 2 YouTube channels, 2 TikTok channels, 1 Instagram channel, Facebook channel, and Rumble channel, and a few others. So if it's not working for you here, there's other channels too. Just wanted to give you a heads up. Okay, but if you give me a heads up, so nobody steals your data, okay, you're talking Greek to me, okay? Somebody told me how to turn the camera on and talk. Yeah, that I know. That safety features and all that other kind, totally clueless. Seriously, I'm totally clueless. I know how to stand in front of a camera and point and tell you what's happening and all that kind of nice stuff. Data, you're totally lost. Okay, keep on going. Alpha Kenny, what is that? Alpha Kenny dudes. What the heck does that mean? Okay, Wes, you like KMI? Alrighty. Thanks, you're welcome. Raz, we looked at Ford earlier today. It was the very first one we looked at today. TGHV, never heard of it. OB Coin, no. KSCP. What the heck is KSCP? KSCP. Nightscope, no options. Yeah, no. JP Morgan. JPM. Okay, I'm going to say no to JP Morgan because it's at the high of the year. Okay, and here's where you should have bought, there or here or here or here. Okay, stocks go up, then they come down, then they go back up again. Well, it's at a high. So when she comes down, okay, when she comes down, she's starting to come down now. Friday was a down day. Today was a down day. She's going to come down a little bit lower, then look for the turnaround where she turns around and goes back up again. Maybe. Okay, Joseph, I don't do coins. All right, that's not what I'm here for. Where is your Bloomberg? Dave, I don't do Bloomberg. I do a very simple trading. I try not to complicate anything. Okay, it's either a simple yes or no. I don't want to get into. Okay, appreciate it. What time frame chart do you find best support resistance? Boss man, interesting question. Hold that thought. The time frames I'm looking at the 1 year chart. I'm looking at the 90-day chart, the 30-day chart, and then I finish off with the seasonality. Okay, see, I don't sit in front of my computer to do my trades. I look at end of day data. That means, what did it do today? Well, this is what it did today. That's the only thing I'm looking at. And it doesn't take a genius to see that today it closed lower than it did yesterday or Friday. Okay, it closed down. Okay, so it moved from here to here. That's an upward trend. Now it's at the top after that big run up. Yep, profit taking, it's going to come down. It's actually that simple. Try not to make it more complicated than it needs to be. I created it for my 9-year-old back 15 years ago. Or wait a minute, 16 years ago? Wait a minute, holy shit, 17 years. I'm getting older the longer I stay here. Boss man, I'm glad you appreciate that. Now you're new here, so the strategy I'm teaching, simple, safe, predictable, consistent, 1% per week. That's what I'm looking for. 10 or 15 minutes a day. I do through 5 or 6 different stocks. That's what I have on my account. I have 5 or 6 different stocks. I just take a look at them. And I do a covered call every single week. And every single week I get 1% or more every week. That's over 50% a year. And for 10 or 15 minutes a day, that's less than an hour a week. So an hour a week to manage my own money, I make 50% per year. And that works for me. Raz wants to take a look at Delta Airlines. Interesting. Renee, Coca-Cola, hold that thought. Oh, okay, Phil, just ask your family and friends for tips on how to encrypt any data your device sends out. A VPN is a good start. You're right, it is. Essentially, if someone has bad intentions, they can steal data and personal information like address and passwords. Ooh, that's not a good thing. But I'll have to remember that one. Thank you for that. Delta Airlines. Basically, it's going to be a no. Do we really want to take a look at it? Because look at where we're at right now. 30 days ago, we're down here at 58. She shoots up to 70. Now it's coming down. Okay, nothing really can do until it does come down. Other than saying, okay, what's going to happen? Okay, it's currently at 67. The 67 is going from 66 to 88. Well, those numbers work nicely. That's over 1%. So what does it normally do this time of year? For that, we take a look at seasonality. Move this over this way. It's not looking that good for Delta Airlines. Okay, we maybe have, what, 1, maybe 2 weeks? 1, maybe 2 weeks before she drops. That's historical performance. That is not guaranteed. That's just what it did in the past. Doesn't mean it's going to do it again. But here's the thing. If it did it 10 years in a row, there's a high probability that it might do it again. All right, Phil. Have a nice day. Thank you, Phil. You have a good day, too. Thank you for the advice. I've been thinking about a VPN, but I'm not quite sure how valuable that will be for me. Okay, Renee wants to take a look at Coca-Cola. Now, to be honest with you there, Miss Renee, I may have bought Coca-Cola 3 times in the past 20 years. That's it. 3 times. Because the numbers aren't always that favorable with Coca-Cola. 64.51 to 65s. Ooh, looks like Coca-Cola does look good this week. 71 to 74. And she's in an upward trend. It might be a little high in the upward trend, but let's take a look at it. Okay? Okay, we're going to take a quick look at Coca-Cola. The high, around 74. The low, around 58. That was back in April. A year ago, we're at 59. Shoots up to 74 in July. Drops back down here to 61 in January. Now currently at 64.55. Well, great. What does the 90-day look like? Well, 90 days, here's your 90 days. Well, 90 days ago, we're at 71. Now, beginning of January, we're down to 60. And she shoots up, currently at 64. Great. What's the 30-day look like? I go from these different charts to give me an idea of, one, well, what does it look like? Where's the high of the year? Where's the low of the year? Where's the momentum going? Then you go to the 90-day to see where the patterns are. The pattern down, up, down, up. Okay, not that difficult. The last 30 days, that gives me a good idea of where it might be going next. And here's the part where I say, no, thank you. The reason why I'm saying no, thank you is I don't like buying at a 30-day high. 30 days ago was the 30-day bottom, 60.65. She went up, pulled back, went up, pulled back. Now she's up again, 64.55. That's higher than where I want to get it. I'm not talking about the number. I really don't care about the number, because the number doesn't mean as much as the momentum. Where is it going? Where was it? Where is it? And where is it moving? Okay, so right now it's at the high of a 30-day period. So from 60 to 64.50, that's only a $4.50 move, which is, what is that, 8%? 8% in a month, that's not a whole heck of a lot. But then it's talking about Coca-Cola. They've been around for over 140 years, 150 years, and they consistently increase their dividends every single year. Okay, so what does it normally do this time of year? For that, we use the seasonality. And that looks something like this. Okay, so we're basically going to go sideways for another week or two, and then you're going to drop towards the middle of, wow, we're in the middle of March already? Holy shit. Okay. Okay, Eve, we've already looked at Nike, okay? Oh, so that's basically it for Coca-Cola.
Okay, we're going to take a quick look at Coca. Inside this is a mix of
All righty. So if we find another, we'll do another video. Okay, so that, I'm going to say no to Coca-Cola only because I don't like buying at a 30-day high. What do you think about realty income? Jacob, you're new here, Jacob. Only because if you weren't new here, if you've been here for a while, you know I don't do monthlies. Okay, I'm looking for a simple, safe, predictable, consistent 1% per week. Okay, a monthly optionable stock means I can only do it once per month. Okay, I like weekly optional stock. That way I can do it every single week. So once per month doesn't work for me. The numbers just don't work. I mean, if you're okay with 12% to 24% per year, yeah, do monthlies. There's a lot of them out there. Okay, but here's realty income right here. A year ago we're at 51. We shoot up to 65. We drop back down to 52. Now we're at 54. Dr. Horton, I have no idea what Dr. Horton means. Okay, Evie, you actually got to give me the ticker symbol because Dr. Horton means nothing to me. Sorry. All right. Have you looked at Purina? Okay. Does that say Jill? Okay, Jill, you actually got to give me the ticker symbol because no, I've never looked at Purina. Callie, weekly dividend. I did not say weekly dividend. I said weekly cash flow. Okay. So I use dividend stocks to create weekly cash flow. Now, the reason I use dividend stocks is because they're consistently profitable. And it's easy. I'm a lazy trader. Really, I am. I'm extremely lazy. I only look at companies that are consistently profitable, specifically 2 decades of consistent profitability. Okay? 2 decades of consistent profitability. Just before they pay out the dividend, the stock has a tendency to increase. So I do a safe trade, call a covered call just in time to collect the dividend. So DHI, is that Purina? DHI, Dr. Horton. Oh, Dr. Horton. I never heard of DR Horton. Okay. DHI. Well, let's find out how, do they increase their dividends? Is it something that's actually... Okay, Evie, realty. Yeah, I know that. No. Oh, look at that. Dr. Horton does have dividends. And ooh, look at this. It's currently at 129, and they have projecting it to go to 167. That's not that bad. Well, this isn't that great right here. The yield is 1.08. Eek. So let's take a look at how consistently have they increased their dividends. Oh, now we're getting in a little. FH, is this lagging tonight or just your connection? I'm here every night, and I usually don't get that answer. All right, we're going to look at how consistently has Dr. Horton increased its dividends. Okay, so DHI, oh, that doesn't look good at all. Okay, hold up a second. Eve, you ready? Here you go. DHI, we're going to take a look at the numbers. Ready? 1997 is 1 cent. 98, it was 1 cent. 99, it was 1 cent. 2000, it was 1 cent. That's 4 years with no increases. Not looking good, kiddo. Okay, 2001, 2 cents. 2002, 3, then to 4, then to 6, then to 7, then to 9, then to 10, then to 15. Not looking bad once it gets moving. So 15, 2006. And then 2008, it decreased by over 50%. That's not good. Okay? And then 2009, it decreased another 50%. Really not good. So 2009, 4 cents. 2010, 4 cents. 2011, 4 cents. 2012, 4 cents. Another 4 years. Nothing in 2013. 2014, 4 cents. Then it went to 6, to 8, to 10, to 13, 15. Okay, so I'm going to say no. Now, when I say consistency of profitability, twice it went 4 years without an increase. Okay, so why would you be putting money into a company that's not consistently profitable? That's one of my biggest objections, or my biggest concerns. People put money into companies that aren't consistently profitable. All right, Eve Realty. I'm assuming you mean O Realty Income. Yeah, O. Yeah, no, they're only monthly. The numbers just don't work for me. Okay, D Money wants to take a look at Nextera. Didn't we look at Nextera already today? I'm pretty sure we did. All right, D Money, Nextera, Neene. Nextera. Here we go. Uh-oh. Here's the high, 86. Here's the bottom, 55 a year ago. She was up, down, up, down, up, down. Now we're at $70. $70, 51 to 72. You might squeeze you 1% out of it. Remember, we only have 4 days left. Okay. Science Biz. It's lagging. I have no idea why it's lagging. I mean, the modem's literally 6 feet away from where I'm standing. All right, so Nextera Energy. Here we go. A year ago, we were at 56.95. We bottomed out at the end of February at 54. Shoots on up on the beginning of October at 86. From there, she drops nicely. Look at the last 30 days. 90 days. So the last 3 months. Down, up, down, up, down, up. So she's turning right now. But which way is she turning? Well, let's go a little closer. Get a little closer. Here we go. 30 days ago, we're at 68. We dropped all the way down to 66, shoot up to 74. Now we're down at 68 again. It's coming down, but today was an up day. It finished higher today than it did on Friday. So it could be turning around, going back up. I like 2 days of the upside. So if tomorrow is another up day, it looks like the soonest I'd be jumping into this thing would be Wednesday. Because I like 2 days the upside. Today's 1. Tomorrow could be number 2. All right. What does Nextera Energy normally do this time of year? Normally, she goes sideways for a bit, then a big drop. Okay, here's the 13th right here. And then a big drop. I'm going to say no because it doesn't give me the warm fuzzies. And I don't, that does not make me happy at all. Sorry, so next here is going to be no. ExxonMobil, well, let's take a look at ExxonMobil. XOM. Okay, here we go. Here's the high, here's the low. Here's where it was, here's where it is. Look at this. Up, down, up, down, up, down, up. 111, the 111s go for 70, and the 112, yeah, no. Sorry. Now, I like ExxonMobil. I have bought it a lot over the past few years when the numbers look good. These numbers change all the time. Okay? So, if you think you like it at 111, the 111's only going for 70 cents. That's not even 0.75%. But 0.75% is not bad. It's like 30, maybe 35% for the year. Now, I like 1% a week. Lagging at times. Been loving the info. Thanks, FH. Must be using cable. Terribly sorry. Lag is bad tonight. Sorry. Bro, you're lagging. Thank you. Thank you. Thank you. Thank you. All right, so we're going to have to do something about that. We haven't changed anything. So everything's basically the same, and we are out of questions. You guys are all done with questions, and we're only at 10 past 11. We got another 20 minutes to go. So let's take a look at some of the stocks we looked at this morning, because today's Monday, and I like looking at stocks that are consistently going. NSRGY. What the heck is that? NSRGY. Yeah. No options. No. Sorry. Jill? No options. Which means I can't make a weekly cash flow from this company other than sitting in front of my computer all day. And that just ain't happening. Sorry. So let's take a look at some of the stuff we looked at this morning. One of them is Dow. D-O-W. That's Purina. Oh, yeah. Yuck. Are there tutorials on how to use Thinkorswim? Of course there are. All depends on what you would. I always look at it this way. If you're looking for a tutorial, find what you want first. But what do I mean by that? Well, what kind of rate of return are you looking at realistically? Be realistic. Don't give the pie in the sky. Well, I want double, triple my money. Yeah, don't give me that crap. Give me a realistic number you're looking for. That's number one. Realistic. Okay. Number two, how much time and effort are you willing to put in? The more time and effort you put in, the higher your rates of return are going to be. More time, more effort, more money. That's just the way it works. Now, when I tell people 5 or 10 minutes a day, basically you're just looking. Let me show you something, just for the fun of it. Let's go here. Let's go there. Let's go here. Okay. Ford. Watch how long it takes me to do this. Ford. Okay, here's the high, low, was, is, last couple of days. There we go. Currently at 924. Okay, I am view my trades. There it is, the 950 put right there. Okay, makes sense. That's all I got to do. Okay, Harley Davidson. HOG. Okay, there's Harley Davidson. A year ago is the high, the low, the last 30 days. Okay, interesting. Today was a little bit higher. All right. Harley Davidson, I've been to it at 35. I sold off the 28s, brought in 25, almost 1%. Okay, that works for me. Okay, nothing else to see until INTC. Okay, here's the top, here's the bottom. Last 90 days, last 30 days, here we go, dropping right there. Oh, 1977, a little higher today. Where am I? 2082, sold off the 20s. It's at 1977. Okay, I might have to roll this one forward. Yep. Roll it forward. Okay, simple. Create rolling order. There it is. How much am I collecting on my rolling order? 24. I'll collect that. Thank you kindly. Okay, then you read it out loud. All right, so 37 calendars Intel, 21 February over 14 February, the 24 limit order bump. That's over 1%, $838. Off to the races. It's going to the market maker. Market maker's going to take a look at it. If the numbers look good to the market maker, he'll fill it, and I'll be up 830 some odd bucks. Okay, not that difficult. Take a look at where you are, what's going on, so on and so forth. Okay, don't make it more confusing than it needs to be. Now, I put all my stocks that I like into the Market Watch, which is a calendar. It tells me what stocks are doing what. There we go. Okay, these are the dividend achievers. This is what the dividend achievers are doing. Okay, we are the 10th right here. Oh, IBM, Stanley Black & Decker, Target, ExxonMobil, DCI, Chevron, Emerson Electric. Ooh, Consolidated Edison, Aflac, RTX, PPG, American Waters, SPGI, Eurowater. Okay, these are all the companies that have the dividends coming up in the next couple of weeks. Well, today's the 10th. Okay, tomorrow's the 11th. Then we have Target and ExxonMobil. Okay, and you just figure out. I put it into the calendar to tell me when to start looking, because just before the dividend, the stock has a tendency to move up. So if I know when the stock is moving up, well, that's when I decide what trading strategy do I use. Okay, Jay Moore, your TikTok, YouTube feeds are not in sync. Okay, I get that. Now, I got one TikTok channel here, one TikTok channel there, one YouTube channel here, another YouTube channel there, Instagram here, Facebook over there, and then down here I have Rumble and Twitch. Okay, now most of them are going to the router first, okay, then to the internet. Because the computer goes from the computer to the router and then to the internet, wherever it goes from there. I have no idea where does it go, where does TikTok signal go, and where does YouTube channel signal go? Because they're both being recorded at the exact same time. So everything's being recorded at the exact same time. So why are some of them lagging as opposed to the others? I couldn't give you the answer to that question. Because if we're live, hypothetically, everything should be in sync. Well, that's what happens when you're using different mediums. Because I got OBS recorder down here with a restream and it bouncing all over the place. GE and Starbucks. Ooh, wait a second. Somebody wanted to take a look at... It's a boy, Allie. Quick question, big dog. Should I text my ex? No. I own some Oracle. Can we take a look at that? Let's take a look at Oracle. ORCL. ORCL. Oracle, interesting. Here we go. Here's the high, here's the low, here's where it was, here's where it is. Look at this. Up, down, up, down, up, down, up, down, up, down, up. 178, the 180s are going for 2. Nice. That's over 1%. Okay, well, let's take a closer look at the chart then. A year ago, Oracle is sitting at 116.26. Okay, bottoms out at the end of February at 106.51. Now from there, she jumps up to the high of the year at 198.79, and that was the beginning of December. Okay, so from the high of the year, she drops down due to the profit taking. Profit taking brings us down to here. Looks like 154, shoots back up again, gaps up, gaps down. Look at this mess. What's going on there? Okay, last 30 days right there. Here's your last 30 days. Your 30-day bottom right here, shoots up, pulls back, shoots up again from 154 to 178. That's a big move. More than likely, there's probably going to be profit taking, but look at the high of the 30-day period, way up in the 190s. We still got 12 bucks to go. to go to the high. So Oracle could go up. But what does Oracle normally do this time of year? Well, for that, we look at seasonality. Seasonality is 10 years worth of data. Well, look at what she's doing. All right. Okay, so for the next few weeks, she should be just going basically sideways, and towards the end of the month, she'll dip just a tiny bit, not huge. But the big question is, do you like Oracle? Are they consistently profitable? Is this a company you're okay with owning long term? Those are valid questions that you should be asking yourself about every single stock that you buy. Is it a good question? Is it a good company? So hypothetically speaking, Oracle's at 179. Okay, and in an upward trend. Okay, the 180s are going for $2, which is over 1%. Does it make sense? Is this a company you like? These are very valid questions you need to ask yourself. All right, that being said, it could very well be. Okay, what do we have next? Fight or flight? Oh, Jill wants to take a look at General Electric and Starbucks. Okay. General Electric. No. Okay, I don't buy at the high. Okay, it's at the high of the year. See it? The high of the year? Yeah. Okay, I don't buy at the high of the year. I'll wait for it to come back. It looks like a few weeks. Okay, she goes up, down, up, down, up. It's going to come down next. Yeah. Answer in fiber optic. Okay, you make the assumption that fiber optic is available here. Okay, I can only do with what I'm available for. Now we're thinking about getting Starlink, so I'm kind of curious, is Starlink going to be better? What are the perks of having Starlink? And what kind of channels do I have to see as opposed to what I'm paying for? So right now I'm paying over $200 a month for my internet and phone. Can I go to Starlink and pay less? Well, I've been told yes. Is it going to give me a better internet connection? I don't know. I've never streamed on Starlink before, but I know a lot of people who do Starlink. Okay. There's a lot of buffering. Sorry, Jay Moore. So here's General Electric. I don't do that. Starbucks, I actually own some Starbucks. SBUX. No. Honey, Jill, come on. Both of them at the high of the year. What are you thinking? High of the year is a time to sell, not a time to buy, in my humble opinion. For me, that's what I do. I'm not telling you what to do. I don't tell people what to do. I don't give advice. I just look at the numbers and I just read what I'm seeing. Okay? Why would you buy at the high? I mean, where are you expecting it to go? Higher? It's never been higher. Okay? Could it? Yeah, it could. Is it going to? Don't know. Check my internet connection. Okay, we'll check into that tomorrow. Club Med Tom. Hey, James, could you show how to select a chart gadget on the left? I can't locate it. Okay, Club Med Tom, I'm not quite sure which one you mean. Could you show how to select the chart gadget on the left? The chart gadget. Oh, this is the only thing I can talk about charts right here. You know, chart type. You know, you get the bar chart. Oh, and the candles. Okay, the candles trend. Oh, the Heiken-Ashi. That one's interesting. That looks lovely. Look at all that green. But I just like leaving it at the normal. I just like looking at the normal one. So I don't know what you mean by that. Bandwidth. Oracle is hit or miss to me. Okay. Good company if maybe you want to hold it for years. Okay, see, FH, I only like holding for a couple of days. All right. I like to buy, make my profit, get out, and be okay with it. Now, Rob, you want to take a look at Tesla. Now, although I like Elon Musk, I like what he's doing, very bright guy. I don't like Tesla because they don't have dividends, which means they don't share their profits. FH, do I ever do cash covered puts? Yes, I do. OMG, too expensive. Jay Moore, I'm not quite sure what we're talking about because right now we're looking at Starbucks. Figured it out. Cool beans. Kaylor, hello. I would like to learn how to invest and how to make money by investing. All right. My best advice, okay, which sometimes I give advice, but usually it has nothing to do with monetary. Okay, drop me your number. I'll give you a call. We'll chat. Now, I don't email, I don't text, I don't do WhatsApp, I don't do, what's that other one? Telegram. I don't do any of that stuff. Your internet bill. Yeah, okay. Yeah, it is a little on the high side. But, you know, I have to have a phone line. I want to say thanks for the talks. Definitely got me thinking more. That's all I'm trying to do. Get you to think. Out of everything I said, the one question that should be eating upon your brain is, does it make sense? You buy a good company that's consistently profitable. Consistency and profitability is key for me. I'm retired, which means I'm responsible for my own income. I'm too young to collect Social Security, all right? And there's no such things as pensions anymore. I've been self-employed for who knows how long. So yeah, I have to make sure that the money I invest for myself is going to be safe and consistently bringing me in cash flow every single week. So I'm looking for the 1% every single week. And that works for me. All right. I think that's it for the questions. You guys are done with questions, done over here. So let's take a look at just a few more before we call it a day. Oh, MDT. Is that Medtronics? MDT? MDT. Medtronics. Yeah. Interesting. High, low. Where was it? Where is it? Down, up, down.